Chukwudi, what exactly is your work? 2 years, you have sold phone, you have sold car, you have sold shoes, and now you are selling furniture. What exactly is your work? Now, are you like Chukwudi, that you have been selling different kind of things? I understand. I'm sure it's because you are trying to make ends meet. Country hard. That is one of the reasons why in the next 100 days, I'm going to be showing you a better way of doing this thing. How you can find purpose, how you can stay and focus on a business and build it and become a huge name. I'm going to be teaching you how to build a successful business. And even if you decide that you want to go online and you want to diversify, I'm going to be showing you exactly how to do it. And also I'm going to be fixing that mindset of yours that has been taking you pure. Join me on this 100-day journey. It's absolutely free. Titled Mind and Money. I am going to be teaching you skills that will help you transform not just your mind but also your pocket. Click on the link below to get registered. See you there. You know say too much garri dey cause alcohol. And you know say this your garri wey you dey take na because of Satan. Now let me show you how you can increase your income. Let me show you ways. Like, stop drinking garri every single day. There are other types of food. There's rice, there's beans, there's chicken, there's so many other things. But you cannot afford those things if you rely on only one source of income, which is your salary. In the next 100 days, I'm going to be sharing with you how you can make money both from cryptocurrency, forex, and from owning a business. And that is not just all. I'll be adding a bonus on teaching you life skills, how to get out of depression, how to handle breakup, and how to live a best life. If you are interested in turning finance around, click on the link below and join me on this transformative journey. It is absolutely free. Stop drinking garri every time. Because I said it's free doesn't mean that the link is going to remain open forever. Get on board. I'll see you then. All right. Good evening, ladies and gentlemen. Welcome to day 67. Day 67, right? I'm sure if you have been following, you will know that, man, it's not been easy. It's not been easy. Welcome to day 67. Thank you very much for, for sharing this time with me. It's been draining. It's been, but one thing I can tell you for free is that if you are, if you focus on what it is that you are going to learn here or that you're learning here, you are going to see a definite change in your finance and in how you think. All right. Okay. So without wasting much of our time, right, we are getting to the last lap of the whole. As a matter of fact, if you divide this program into 3, this is the third part. This is the beginning of the third part of the whole 100-day series. Okay, so tonight on the Forex Chronicles, we are going to be looking at entry and exit strategies. Entry and exit secret. The secret to proper entries and exits. Now, one of the things I want you to understand is one of the major thing that makes a difference between a professional trader or a successful trader and a not so successful trader is your entry and your exit. As a matter of fact, in every financial market, one of the things you need to understand is that what determines whether you make profit is if your entry and your exit are on point. Your entry and your exit has got to be on point. Now, what are some of the secrets to your entry, right? So this is what we are going to be looking at for today, right? There's so much importance on your entry and there's so much importance on your exit. Now, your exit is not just about, when you are speculating a market, you are speculating that this market will rise. So if you are speculating that there's going to be a rise in the market, you are looking at going long, right, or taking a buy, right? And if you are looking at the market is going to sell, you're looking at is the market is going to fall, and you're looking at taking a sell position or going short. But whichever of them it is, you need to understand that there you have to create room for your exit. And that exit is what happens? How do I get out of this trade? And when you're looking at how you get out of this trade, you're looking at both the positives and the negative. And for the positive, I'm talking about if this trade goes in my direction, I want the market, I'm speculating that the market will fall. I'm speculating a sell. If the trade goes in that direction, where am I going to get out? Because the market will not keep falling forever. And the market will also not keep rising forever. So where is your exit? If you are correct, your exit will be your take profit. If you are wrong, your exit will be your stop loss, right? So you need to understand, because a lot of times, a lot of people go into a market and the only exit that they are looking at is take profit. That means the market must go in their direction. So what happens, my brother and sister, if the market is not going in your direction? Have you factored that the market is a probability? Is a probable market. It's a game of probability. In as much as you are doing your analysis, but you are not God, right? You can read the market very well, and one news from somewhere will just send the market the other way. So you need to make plans for that. Okay, so without wasting more time, let's look at the things now. For you to have an effective entry, right? Of course, you should know how to do your market analysis. You know, market analysis here, because these are the components that will give you an effective entry strategy, right? So you must be very good at analyzing the market. And this is both technical analysis and fundamental analysis. You must be very good at understanding what the charts is saying. You must be very good at understanding, or you should work at understanding technicals and fundamentals. And by fundamental analysis, I'm talking about fundamental indicators, news, and the rest of them. You want to ensure that you have an understanding, in-depth understanding of market analysis. Now, having done that, and in as much as a lot of people prefer, presently now, a lot of people trade with, what do you call it? Price action. Yes, price action is reading the bear chart. But trust me, if you're building an effective entry criteria, having one or two indicators can be very helpful. So you need to understand indicators. Not necessarily clouding your charts with indicators, but you need to have an understanding of maybe one. See, the truth is, if you pursue a lot of indicators, you will not be able to take any decision. You are going to have what is called paralysis by analysis. That's analysis paralysis. So you have analyzed so much that you are now handicapped in taking any particular decision, because one indicator is showing you that the market is buying, another indicator is showing you that the market is selling, and all of that. So you want to have one or two indicators that you have understood. Understand that you can now add to your entry strategies. Then after that, you also want to have an in-depth understanding of candlestick patterns. What is a candlestick saying? What are the different types of patterns? What does each candle mean? You understand? When you see a doji, can you understand what a doji means? When you see an engulfing pattern, when you see a hammer, when you see a rising, when you see all those things, rising wedge, falling, all of those, can you understand it and apply it in taking a trade? Now, I've given you three components now: market analysis, indicators, candlestick patterns. You want to learn all of this. Then finally, not finally, but one more, is support and resistance level. This is very key. Support and resistance level is very key. Support and resistance level is very, 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 very key. Right? Because These support and resistance level are actually what will act as your entry point and exit point. Very important, right? This is for your entry. Now, for you to effectively have an entry, or to have, I've given you some of the components. Now, before you can make good profit trading crypto, you should have what is called an entry criteria. That's the secret now I'm sharing with you. You should have what is called what? An entry criteria. Now, what is an entry criteria? What and what are the things that must happen or that you must see on the chart before you take a position? What and what are the things you will see that will determine the position you are going to take? Very importantly, what and what will you see? Now, let me give you just a rundown. Number one, some of the things that your entry criteria should contain is one, confirmation of your trend. The trend is your friend. The trend is your friend. Always look first to confirm trend. And why do you need to confirm trend? So it will make you understand if the market is bullish in the long term, which is the higher time frame. That means you want to be looking for what? Buying opportunities. If the market is bearish, you want to be looking for what? Selling opportunities. That's number one. You are looking for what? Trend confirmation. Having done that, the next thing you want to look for now is what? Your support and your resistance level. Support and resistance level. You want to identify your key areas. And why are you identifying those key areas? Because you are going to wait for price to approach those areas. Then you look for a sign of either a breakout or a rejection. Very important. Then the next thing, number three, that should be contained in your entry criteria is your technical indicators. You want to have, okay, so you want to have an indicator that will tell you, okay, if I'm using an RSI, for instance, and I see a bullish convergence, or an overbought, or an oversold condition, or a divergence, any of all those things, you want to have a technical indicator as part of your entry criteria. What is that indicator saying? The next, very importantly, as if you are adding your support and resistance level, is your Fibonacci retracement level. Now, this is similar to your support and resistance level, but this will help you, identify potential areas when you can enter the market during a retracement, when you have established a trend. Then the next, which is your number 5 now, is your chart patterns. You want to have a picture, a diagram of what your chart patterns look like. If they are not already in your head, what does your chart pattern look like? If they are not already in your head, you want to have that picture, right? And the chart patterns we are talking about, we are talking about the flags, the triangle, the head and shoulder, the double top, double bottom, cup and handle, all those things. You want to identify all of them. Then most importantly, your price action signal. This is what will now determine buy or sell. So you want to identify price action pattern, that once you see this pattern happening in certain area, open a trade. Now, what does that mean? So if you have all these criteria, you have confirmed your entry, okay, the market is bullish, so I'm looking for a buy. I'm looking to take a buy. I'm looking for a buy position. Then the next thing you're looking at, okay, market is approaching what? A support. The market is correcting towards, a support. So you're looking at, if you add that with your Fibonacci retracement level too, it will be a good, pattern. Then add that, before look at your technical indicator, maybe your RSI. Your RSI has just maybe crossed from above 50. So that's showing you that it's bullish. another. So when you add 1, 2, 3, 4, 5 things, you now have what is called a confluence. Or rather, you have a criteria, rather, not even a confluence. You have a criteria. Now, it means before you take a trade, this trade must meet 1, 2, 3, 4, 5, 6, 7, all those criteria that you have listed. So you know that if I want to take a trade that doesn't meet all these criteria, it means it's a risky trade. So if out of 5 or 6 criteria your trade meets 4, you can go ahead and say, okay, let me still look at this. Right? So those are the reasons. Now, another thing you must understand when we are looking at entry criteria is what we call confluences. Confluences. Now, confluences majorly is when there's an overlap. There's an overlap between maybe 2 indicators, 2 different time frames, 2 key levels, and the rest of them. When there is an overlap, it's 2 different, analysis. Let me give you an instance. For confluence, we can have multi-time frame. Of course, I'm sure you know the multi-time frame analysis, where you are analyzing the market in long term, short term, and mid term. So sometimes you are looking for a confluence between different time frames. Why? To ensure that there is an alignment of trend. That's confluence. Some other times, some indicators, different indicators will align with your analysis. That's a confluence. Some other times, your key levels, your support and resistance will coincide with Fibonacci retracement level. Then, of course, your chart patterns, recognizing your chart patterns. So all these things happening together is now a confluence. So once you can impute your entry criteria and look for confluences across various factors, it increases your chances of trading, or your chances of profiting in the market. Right? Okay, now let me give you an example. Okay, so let's say you have an entry criteria that says, okay, if I see a doji or a pin bar reversal at a key support level, I'll buy or sell, depending. Now, the first thing you're going to have in this kind of entry criteria will be, first, identify the trend. Identify the trend. How do you identify the trend? You check the 4-hour chart. That's if you're a day trader and you confirm overall trend. All right, so you've identified the trend. Then the next thing, you locate your support level. Why? Because you have already analyzed that the market is bullish, the trend is bullish. So you are looking for a support. So when price bounces on the support, you want to take a buy. So you've identified your support level. Then you go to the next thing, you're waiting for your pin bar formation. So you're monitoring price. What is price doing at that support level? You are waiting until you see it. You are looking for a bullish pin bar. You are looking for a rejection. You are looking for potential bullish momentum. Right? So once you have seen all this, you now confirm the factors. What are the other now? This is the 3 things you have looked at, right? But another thing you want to do now is to look for confluences. And what is the confluences? You have analyzed the market. The trend is bullish. The price is at support level, and I'm waiting for a pin bar formation. This is what you should use to enter. But now you want to confirm the trade. Then you look at, maybe your RSI, and your RSI is telling you that there's a bullish divergence. What is bullish divergence? That market is about to reverse. Right? So the next thing you're waiting for, having confirmed it with 1 or 2 confluences, is you're looking for your entry trigger. So your entry trigger could be enter the trade immediately the bullish pin bar closes, maybe with a buy stop or something. above the high of the pin bar, whatever it is. Then your stop loss, of course, you are placing your stop loss below the pin bar. And you could add maybe one or two, some few pips, 10 to 20 pips below the low of the pin bar. Now, do you notice that stop loss is here? Then your take profit could probably be either the next Fibonacci level or the previous swing high, or you're just targeting risk reward. Either of them, you're good. All right. Now, having said this, next thing is your exit strategy. Now, you see, like I said, when the market, once you enter the trade, you are looking at how do I get out of this trade. Your exit strategy is very, very important. Very important. Right? So what and what are you supposed to do? First, if the trade does not go in my direction, how do I get out? There are three ways. One, you close it manually. Number two, you set a stop loss that will be closed automatically. Number three, you set a trailing stop loss. Now, if you have gotten your entry right, your exit should be very, very, very key. What does that mean? You can use either of these three for your exit if the market does not go in your favor. Manually closing the trade when it gets to a certain level, or automatically setting a stop loss at certain level. And what could make you stretch your stop loss could be because of either your ATR, your average true range, or you look at the previous support or resistance level, then you move away from that with the low of that candle by a few pips. And also you could use a trailing stop loss. Now, what is a trailing stop loss? A trailing stop loss is simply a stop loss that follows the market as it's moving. So if you say the market should buy, as the market is rising, your stop loss is moving with it. Now, why is this? Why are you doing this? So if the market reverses along the way and goes back, you're not going, sometimes if you would have even made some profits after that. That's what a trailing stop loss is. So people use all of this as exit strategies in case they are wrong. Then finally, your take profit. What's your exit strategy if you're correct? The first thing you want to do is, first, there are three ways to, of course, to take your profits. Number one is risk to reward. Risk to reward. Now, what is risk to reward? I am risking $10 for this trade to make $20. So that means once you get to $20, no matter where the market is going to, I no send. Take out my profits. And we go again another day. That's one, risk to reward as your exit. Number two is to use what? Key levels. I bought at a support. I am going to sell at the next or at the level of the previous swing high. Right? So I'm not just targeting a number of pips. I just want the market to complete its movement, its move. So once it gets to this level, I take my profits. Right? That's number three. That's number two. Right? Then number three is now break of structure, break of market structure. Break of market structure. Now, what's break of market structure? You've taken a buy, you have opened a buy position. You are going to follow that trade until you see that there is a market reversal. So you are waiting. This is especially for long-term traders. So you take a buy, and you are waiting for market to show you a sign that it's exhausted and it breaks the market structure and trying to reverse. Then you want to get out of the trade. So these are some of the things that I think if you bring this and add to your tool as a trader, you will be able to improve on your results. Okay, so this is where I'm going to stop for today, right? I'm sure you gain value. I'm sure you're gaining value. So thank you very much, guys. Tomorrow we continue with day 68. We're going to be looking at and God bless you.